Hi, this is Kerry Artek with Artek Advisory, and this is the AgriTalk video supplement for Monday's show, August 30th, in which I cover three markets: October heating oil, December corn, and October live cattle. Before I jump into the charts, I just encourage you to fill out that free trial form if you haven't already. If you've been following the show for some time, I would love for you to take a look at the newsletters. You'll get unfettered access to everything that I put out on a daily basis for 2 consecutive weeks. And you'll get a phone call from me, a couple of phone calls perhaps. The first would be within a few days of you starting the free trial, whereby I see if you have any questions. We can talk the markets, see how you trade the markets, maybe hedge the markets. Maybe you're a speculator or a longer-term hedger, whatever the case might be. And the free trial form is on the website. It's the link is everywhere. Just need a name, email address, and a phone number, and that'd be good to go. So would love to see you jump on board here. Take a look at the work for a couple of weeks. No hard sell. Once the 2 weeks is up, you're either interested or you're not. And I don't put you into a kind of a continuous email funnel or marketing phone sales. It's just not my style. You've got better things to do, but you may get an email from me once in a while. Anyway, let's jump to October heating oil. I'm going to be showing you really the same chart 3 times from different time perspectives. This is the big picture. I've had a buy signal in heating oil since earlier this year, anticipating this 2.3264 long-term channel top. Now, by the way, this is a weekly continuation chart of heating oil. I probably should have this labeled at the top of the graph, but this is the weekly continuation chart, volume-based rollover. Each of these vertical marks is a week. This goes back about 5-6 years. And 2.3264 is the ceiling. It's been a target now for months. It may actually be in reach here by the end of September. And it can contain buying into next year, possibly through next year. And if settled above, would be a significant long-term buy signal. But we're nowhere near that right now. And in fact, holding above this 1.8318 to 1.8683 area, I'm expecting this over the next several months. I'd say by the end of November, possibly sooner, this area 1.8318 to 8683 is a rising channel bottom and 1/3 speed line that can absorb selling through the rest of the year, and above which we should over the next few months actually reach that 2.3264 objective. Let's take a look at on the way up. If we happen to settle this week, Friday, this is a weekly chart, remember, above 2.1291, then I think we're just about 2 to 3 weeks away, actually, from reaching 2.3264, able to contain buying into next year. Once again, this is October contract analysis, October heating oil. Let's talk downside in the event, and I think this is a better chart to show it, in the event that over the coming weeks, the market actually settles below 1.8318. I am off that long-term expectation for 2.3264. The market is then tipped south through the rest of the year. The next 2 to 3 months, perhaps 3 to 5 months, I think closer to 2 to 3 months, say by the end of the year, we should fall back into the 1.2511 area, where this speed line can absorb selling into next spring. But right now, I think this is a good photo here, a good picture to show you that we're in a two-sided framework, midterm, but longer term, still expecting 2.3264 above 1.8318. And in fact, I'll leave you with this. Once again, closing the week above 2.1291, we should actually reach 2.3264 by the end of September. And let's move on to December corn. On the Chicago Board of Trade corn, reflecting the December 21 contract. If you've been listening to the show, you know I've been in sell mode for the last couple of months when the market back in June settled below this trend-defining rising speed line that is now well above the market at 684 and a quarter. we've been locked in sort of this consolidated framework now for the last couple of months, but I still think the market can fall to 464.5 before the year is out, and that remains true below the 580s. Let's take a look at that same chart but blown up. I've got 578.5, which is the start of a range of resistance, and I'll show you that in a moment, up to 584 3/4. 578.5 up to 584 3/4. 584 3/4 is the same channel top I just showed you at 578.5, but on the December only weekly chart. So 584 3/4, we actually rallied to within 2 cents of it a few weeks ago during that WASDE report. The market remains heavy below 584 3/4 and should over the next several months fall back to that 464.5 long-term channel top, which is right about here. Oops, let me remove that. 464.5. Well, there you go. It's 464. So this is really what we're looking for over the coming month, 2 or 3, holding below 584 3/4. Now, if we close above 584 3/4 at the end of any week, then we actually have a buy signal into later years. So the way I'm framing this is the big picture here: 684 1/4 long-term ceiling, 464.5 long-term floor, and inside that I've got a 584 3/4, a pivot point, and that is roughly right around here, 585.5. That's roughly it. So if we close above 584 3/4 at the end of this week, then we have got bullish continuation over the next several months into the 670s, 680s. Along the way, the December chart has respectable resistance in the 640s and 650s, where we can top out for several weeks. But I do think that if we do close above 584 3/4 at the end of any week, then I'm no longer expecting 464.5 as a longer-term objective, and do think this market can claw its way up into the 670s, 680s by the end of the year, where I might add this speed line at 684 1/4 can contain buying into next spring, into next summer, and from here we can fall off again. If we were to close above 684 1/4, then I would anticipate 834 1/4 over the following 3 to 5 months. But right now, still heavy below 584 3/4, represented by this horizontal line, anticipating 464.5 before the year is out, where, I might add, 464.5 long-term floor of support able to contain selling through next year. Now let's move on to October live cattle. And finally, October live cattle. This is the live cattle weekly continuation chart, which is the, it's the stringing together of other high volume contracts that preceded October 21. October 21 is presently reflected on this chart. Last week, we rallied to within 2% of this long-term resistance area. It's been a target now for some time at 134.82. Nothing significant about 2%. 1% there is. So if we push into the 133.50 area this week, it is the beginning of a zone of resistance that can contain buying through next year. And from here, we can easily fall back. The next few months, the next 3 to 5 months, by the end of the year, we could actually fall into the 116.45 area. I could see the market trading inside this wedge all the way through the rest of the year. Now, if we were to close above 134.82, long-term buy signal, I have a quick, 2 to 3 month target in the 146, 147 area. That's an exact number I may apprise you of on the show as we continue into later year if we get that buy signal. And then ultimately, over the next full year, I think the 2014 high would be in reach. That 172.75 high from 2014 would be kind of a one-year target if we were to close any week above 134.82, dropping weekly by a 1% margin, just FYI. Now, downside, as I mentioned, once we test this, or even holding below this area, does allow 116.45 over the next few months. Let's take a look at on the way down. I've got decent support at 123.45. This is a formation that, if tested over the next few weeks, can absorb selling into October trade, and from here we can turn back up into the 134 handle by the end of the year. But if we close below 123.45, we've got a decent sell signal then into October. The next 3 to 5 weeks likely to yield that 116.45 channel bottom. Now 123.45 is also preceded on the December chart as well at 124 even. This is a different set of data. This is October only chart data. So, and here's something I think is worth showing. The low of last week was 128.35, and that was a spike high. I mean, we rallied early in the week, came falling back, and just closing below 128.35 at the end of this week should yield this 124 even formation over the next week, 2 or 3, where really we've got 124 even as the beginning of a range of support down to 123.45 that can absorb selling into possibly through October. And from here, we can turn back into the 134 handle within a matter of a month or two. But as I mentioned, closing below 123.45 indicates 116.45 within another 3 to 5 weeks, where we can bottom out through the rest of the year. Bear in mind, all these numbers are changing on a weekly basis. This formation is rising. So what's at 123.45 this week rises next week. That's why I encourage you to take that 2-week free trial, and you'll know where these formations are for the next 2 weeks. And while I'm at it, I encourage you to become a regular monthly subscriber, and you'll know then, perpetually where all this stuff is landing. I think that's all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.